returning to its rightful place, where I think it's perfect to talk Tesla here on FOMO, particularly after a stock split. So many things that encompass this feeling of FOMO in financial markets, Tesla just encapsulates. So active, probably arguably the most liquid instrument in many ways. I think you can make that argument, at least on an individual company standpoint. It moves around a lot, tons of volatility, ties to electrification, EV, it's cool, it's got a loudmouth leader. Everything you could think of, Tesla brings to the table when it comes to next generation investing and fear of missing out of something. Could be bad. There's a lot of Tesla haters. Could be great. There's the ultimate bulls or Tesla bulls. It's got a little bit of something for everybody.
It really does. And I would say even just, outside of Tesla, Elon Musk is by far my favorite Twitter follower. I mean, across the board, he is wildly entertaining, especially usually at Friday afternoons is when he really picks up. So it's always prime time Elon Musk tweets. But we do know that, of course, Tesla split their stock earlier this week. And I think that, it's important to sort of break down the grounds at which Tesla really stands in this market. They are the sixth most valuable public company with a market cap of over $920 billion. Of course, it's down significantly from where they once were, but still, this is a $900 billion company. Now, they're joining their mega cap peers like Alphabet and Amazon in undergoing a stock split in 2022. Now, they previously did split back in 2020 with splitting 5-for-1. They only split, I say 3-for-1, but we were joking during the break, Alex, that shares are still relatively expensive. They're just trading under $290 a share. So this is still, not exactly the most accessible name at that high of a price tag, just relatively speaking. I actually read an interesting statistic that said if you invested $1,000 in Tesla following its last split in 2020, it would be worth now just shy of $2,000 today, representing a gain of just under 99%. So the stock has been on a tear for the last 2 years, despite the fact that we have, of course, seen some weakness on the year, down about 19%. But regarding the stock split, shareholders on record as of August 17th received a dividend for 2 additional shares of common stock, which then marks that 3-for-1 split. Now, shares were distributed at the close of trading on Wednesday. And of course, we know that this company is not, resilient. Like you mentioned, there are still negative headlines out there. It's not just all positive regarding Tesla. They've been absolutely hit with these brutal shutdowns this year in China regarding their factories. But I was actually reading a report regarding Dan Ives of Wedbush saying this does not seem to be an issue of demand, which he's been sort of a notorious bull of Tesla. He said that the EV maker is still on pace to produce over 1 million vehicles annually, especially given the improving situation in China and as production does ramp up at their Austin and Berlin factories. Now, U.S. regulatory framework has also been a recent positive for Tesla, but we're not really seeing that play out necessarily in its stock performance. Shares are down about 2.5% for the month, lower this week. So although this Inflation Reduction Act is definitely a positive for consumers and these EV makers, it doesn't really seem like we've seen that reflected in a lot of these names across the board, Alex. But I do think no matter what, when you split your stock and you're a name like Tesla, you just have added eyes on you. We can see that in the volume of trades. Even though we're lower today, I do think that all of a sudden this name at $290, which feels weird to me, still expensive, but definitely cheaper, it just becomes a less capital intensive trade when you're looking at a name like Tesla, Alex.
Yeah, and that's really the key piece, but also at a lower price, it means there's more supply of shares, which means the liquidity improves, which means the option markets are slightly better. And you said a lot of things I think are really important in terms of assessing this company. It's always had the issue of, is it a car company or is it something more? Certainly isn't valued like a car company, so maybe that gives the answer of where the market assesses it. But I always wonder in the case of Elon Musk too, the guy's busy. He's got so much going on, right? He has all these different companies, or he's tied to all these different companies. His calendar's got to be just completely stacked with stuff. He's got to be organized. He has to be. It's the only way you could do that. Does he just have this time where it's free time or go on Twitter time? There's got to be something on his calendar where he carves out this piece of time and he stirs up the storm a little bit.
Oh, absolutely. And I admittedly wake up really early. Like I was up at 3 a.m. this morning, and that's usually when I see him tweeting. So I'm convinced this man does not sleep, because I also don't sleep. So the fact that I'm seeing him tweeting at 3 a.m., 2:30 a.m., I'm like, this guy does not follow a regular sleeping schedule, because you couldn't with operating in so many different vehicles right now. I mean, Tesla, SpaceX, Twitter, and those are just, there's other side projects of his that, just to name like a few of those. But regardless, Tesla is still, I'd say, the interesting story here. I think that it's been sort of pushed to the side with, of course, his potential acquisition of Twitter. But I do think that the interest in Tesla still remains, of course. I mean, this is a major company, and I think it's important to sort of parse through the headline drama, the Twitter drama, and actually, where Tesla as itself stands. And Alex, I think that, the FOMO today, or most days, is to the upside. I mean, I think a lot of people look at this name and they sort of wish they'd gotten in back in 2019, when, of course, we saw things sort of take off. Mm-hmm. However, I do think that the FOMO, the feeling of missing out, is usually to the upside in Tesla.
Yeah, and I think that there's certainly an enough sentiment that bets against Tesla as well. Unfortunately, it's been kind of an extinct kind of, I guess, group of investors and traders, because it's been such a tough name to bet against. Mm-hmm. Of course, if you've been nimble, there's certainly been periods of volatility this year, no exception to that. But I would say the general public, the general feeling around Tesla has been one of belief, and it's also been a company that has done a lot of things that many said it could not do. So I understand why there are believers. It's always just going to come down to what is it worth, and it's hard to say that. But from a feeling of trading this and feeling of missing out, from a stock price standpoint, it has been one, at least recently, of one to the upside. And so we're looking at it with that in mind. Stock trading right now just around $290. Was a little bit lower than this earlier when I was looking at this trade, but it's close enough that it'll still keep these strikes kind of in play for what we were looking at. Jenny, we're looking at something that's called a call condor. So I think this kind of highlights what you were talking about with, yeah, this stock's now under 300, which is much better than roughly 900 or 870. But it's still quite expensive. And so options can even make it a little bit more accessible. And something like a call condor can do that as well, because the option premiums in this are quite expensive as well, given that it trades with about 50% implied volatility across the option chains here in Tesla. What we're looking at doing is buying a $10 wide call vertical, one strike in the money, one strike out of the money, the 285, 295 stock at 290. That perfectly is in the middle of that. But in order to chip away at that debit a little bit and make it even a little bit less than if we just bought that call vertical, we're selling the 300, 305 call vertical, doing the whole package for $3.25 or something around that mark. That would bring the break even to 288 and a quarter, which is lower than where we currently trade. So buying premium, but positive time decay. I think that's interesting. Max possible profit does level off between 295 and 300 at $675. That would be basically the full value of that debit spread that we're buying, yet that credit spread expired worthless. There is a point in which between 300 and 305 where we do start to give back some of that 675, and it levels off to a $175 max profit if we do breach 305 and work to the upside. So with this kind of strategy, one of the trade-offs is, of course, that we give up our upside if it runs too far. But because of how this one was structured, there is no upside risk, because the spread we're buying overpowers, if you will, the spread that we're selling.
And your break-evens do consider the fact that Tesla does have a market maker move today, which is sort of funny to me because they don't have any sort of earnings event or any obvious catalyst. We don't have earnings now for, I believe, another 2 months here, as we just got numbers from Tesla back in July. Also important to keep in mind for our example trade today that multiple legs can lead to higher transaction fees. Short options can be assigned at any time, and carrying option positions into expiration can add risk, like unanticipated exercise or assignment.